So in this video, we're going to be going over the latest results for Evolution AB, the first quarter of 2025, which is not the best quarter that I've seen for Evolution, probably the worst one since I started following the company 3 years ago. And the stock price absolutely tanked after they announced the Q1 results, going from about 86, 87 all the way down to 69 and 70, what it's currently sitting at. Now, my average price for the company is around 95, so obviously I'm well into the red, but in my opinion, it's still a high quality company, although they're experiencing some problems in the business, to say the least. But we can see the evaluation of the company is very low, where the free cash flow yield is now up to 9%. So the market is really not factoring in big growth numbers for Evolution. And I do think that the shareholder base has been changing for Evolution, where it used to be investors that are buying high quality companies at any price, but Evolution used to be very highly rated at around 50 times price to free cash flow, and it has now turned into more GARP investors, growth at a reasonable price, and value investors. So the expectations for the company are definitely changing. So let's have a look at the Q1 results, which, like I said, and like probably most of you know by now, were pretty weak. We can see a net revenue increase by 3.9%, which is very low for Evolution. Historically, they've had much higher growth, but times are different now. Their EBITDA decreased by 1%, and the profit from the period went from 269 million in Q1 of 2024 down to 254 million, and the earnings per share went down to 1.24 euros from 1.27. Now, in the Q&A with Martin Carlesund and the new CFO Joachim Andersen, they talk about this being a temporary problem, and they expect the later half of 2025 to be much better than Q1 and Q2, which are pretty heavy for the company. And they talked about the proactive and self-initiated actions to ring fence regulated markets in Europe. So with this ring fencing that they're doing, it's obviously costing them a lot of money to implement, and also it's making them lose revenue from the unregulated markets. But I do hope as a long-term shareholder that this will make their competitive advantage bigger, since regulations are becoming stricter. They did launch a third studio in New Jersey and second studio in Romania, and they've been buying back a lot of shares, which is always good to see, especially when the price is so beaten down like it is today. Now, profit margins along with EBITDA margins are obviously going down. We can see the EBITDA margin 65%, which is still ridiculously high compared to 69% last year. The profit margin 48 compared to 53, but like I said, 48 is still very high and higher than I think most of the companies that I have in my portfolio. So Evolution is definitely a high quality company, although like I said, they are experiencing a lot of trouble, and it's causing a much faster slowdown than any of the shareholders were expecting. And you know how the markets work, they really don't like unexpected things and uncertainty. So I think that's what's causing this massive sell-off, which in my opinion is an overreaction, especially if you think about the stock being rated very low before. They were trading at like 12 times EV to free cash, and the news on this slowdown in revenue growth of only 3.9% year over year is causing the stock to sell off like 18%. But that's what makes the stock market a great place to be, and that is what gives us a good opportunity to buy good companies at very low prices. These are opportunities that we don't get anywhere else, not buying private companies or real estate or any other asset class. So we're always thankful for that. But definitely the most challenging thing about the stock market is keeping your head straight while everybody's going crazy. And that's easier said than done, especially if you have a lot of money riding on one stock. And Martin Carlesund, the CEO's comments are very insightful as usually, and he talks about the company addressing the ongoing issues in Asia, where they're implementing technical countermeasures to stop criminal cyber activity, which obviously has put a lot of pressure on the revenue growth. And secondly, on top of what they've already done in the UK to meet the regulatory requirements. They are taking a proactive and self-initiated action to ring-fence additional regulated markets in Europe. And Martin emphasizes in the conference call that this is a proactive measure from Evolution. So this is not something that was required of them from the regulators, which is good to hear. And finally, he is obviously not happy with the financial development in the quarter, but he deems it as necessary steps to contribute to their mission to increase the gap to competition. So I think as shareholders, we just have to trust the management team to do what's right and give them time to work. And for people who haven't entered the stock or already have a position, they might be adding to the stock right now because of the low valuations. And we can see the development here in Live Casino versus RNG at 431 million in Q1 of 2024 compared to 448 in Q1 2025. And RNG has seen a small increase, but both of these numbers are lower compared to Q4 of 2024, which obviously is unusual for Evolution. One positive that I saw in the financial statements is that cash flow from operating activities went from 301 in Q1 of 2024 up to 361 million. So that's about 16% increase year over year. And here we can see the comparison in each individual markets. Europe decreasing from 191 to 189. Asia slightly increasing 197 up to 201. North America going from 62 to 71. So that's still looking pretty good, but you wouldn't call that high growth. Latin America 33 to 36 and other from 17 to 21. And we can see the shares of regulated market going from 39 up to 45. And net revenues of regulated markets 195 up to 233. So a positive development there. So in terms of capital allocation, Evolution is very shareholder friendly when it comes to dividends and share buybacks. They're paying out 572 million euros to shareholders, and they are spending 500, or the share repurchase program is 500 million euros. So you can see that they're giving back over €1 billion, with the company having a market cap of, I think it's around $14 billion right now. So the dividend yield is around 4% or so, with a company that has no debt and are growing their free cash flow year over year and are trading at a 9% free cash flow yield. So that sounds pretty good, but obviously a lot of problems at the moment. And if you are a shareholder in Evolution or thinking about buying shares, you have to be able to determine if these problems are short term or if the company is fundamentally becoming a worse business. And here we can see a decrease in the shares. Q1 of 2024, the shares were 214 million outstanding compared to 205 million in Q1 of 2025. So that's about 4% decrease in shares outstanding, which is good to see if you're a shareholder. And we can see why the market is reacting like it is. With the EBITDA margin going from pretty steady, 69 and hovering around 70, and then going down to 65% for this quarter. Same with the operating margin. It was pretty steady at 63, even going up to 66% Q4 of 2024, and going down to 58% in this quarter. And the revenue growth has slowed down at an incredible pace. So you can see 31%, 28%. So you're in the high 20s, high teens, low teens, and then down to low single digits. Now, the company always has a very strong balance sheet. That's why they're able to buy back so many shares and pay out a large dividend. You can see that they always have a large cash position, which is almost reaching $1 billion right now. So to summarize, I'm obviously not happy with the quarter like Martin Carlson talked about. I do believe that these problems are short term, and I'm confident that the management team will be able to resolve these problems. And only time will tell if I'm right or not, but obviously I have a lot of money riding on it. But I won't be making this video any longer today. I want to thank you for watching, and remember to like the video and subscribe to the channel if you haven't already.